Welcome to this tutorial class. This is just a basic tutorial, not advanced, not for advanced class. This is just for those who literally have trading experience on Forex or binary. In this case, I will highlight few things that would help you. I will not go too technical. That will even end up confusing you. I will pick up a few things that would help you through my own style of trading. It will help especially those that will later acquire the full training, the formal training. I'm not saying you cannot check around on YouTube, grab some informal training and go into trading, but you risk your money in that case, definitely. So you go to formal training in order to eliminate or reduce your losses. I had a case of a friend who told me, hey, well, I never knew he's even a trader until one day he saw my post on WhatsApp. He said, I lost a lot of money today. I asked him why. He said, he didn't know that this will happen and the other one happened. I said, okay. Did you actually attend any kind of training before you started trading? He said, no. I said, okay, that's a problem. You try to save money. In the end, you lose more than you were trying to save, because formal training will not cost you more than what you will earn from the market if you actually acquired it. So it's better you undertake a training so that you will be able to make much more money. You will recover a lot of money if you had a formal training. Let's get started. Like every other computer program, this one is not different. The name is Metatrader, delivered by Meta Quotes. You can search it on Google. Meta Quotes is a company that offers brokers this platform for trading stock, currencies, and all that. This one came from binary.com. They offer both Forex and binary trading. You can register a standard account, advanced account, or synthetic indices account, which is for binary trading. Standard account is for normal Forex trading. Now, we have the menu bar like other computer applications. We have the standard bar containing shortcuts to commands that are actually in this menu bar. We have the time frame. The time frame, I will explain how it affects this chart you are looking at here, because they are more interrelated a lot. Here we have the market watch. This time you are seeing here is the current time. By our own time, it is 9:01. We are 1 hour ahead of the server time. That's where the server is located. We are 1 hour ahead of them. Here we have the symbols that indicates different assets that are tradable on your account. It means you cannot withdraw the money. It's just for you to practice, to see how, learn how the market moves. And you have only this one, the currency, Euro USD. You have only 3 of them here. This one, Euro USD, is a currency. You trade it on Forex. We have step index from binary trading. We have GBP USD on Forex, foreign exchange. That's Forex. We exchange one currency for another in order to make profit. You'll know more about this in a few seconds, a few minutes. So here we have the prices, the bid and the ask price. Then this third column here is the spread. I purposely displayed it. If you want to display display other columns, you right click on that, you go to columns. There are a lot of them. Here is the spread. If I remove it, it will disappear. But I knew why I opened it, because it's essential to trading, very much essential. It affects your trading so much. That's why I had to open it. So now I'll put you through other ones anyway. We have navigator. I'll get back to this market watch. We have the navigator. The navigator owns the account and how account number and few other information details. Here we have the indicators. The indicators tells you when to buy and when to sell if you use them very well. However, it is not accurate. None of them is accurate. You may even combine 2, 3, 4 of them. You will still run into issues someday. That's why you need formal education. I'm going to use one today to trade. I'll place 1 or 2 trades. Remember actually that the purpose of this video is for demonstration purposes. It's not something you will need to apply on your real account where you use your real money yet. Not yet, because there are some information that will not be revealed in this video. And you need all the information you can get because this is money we are talking about, not a joke. We have expert advisors, which are the trading robots, where we add trading robots and we use them to trade. We have scripts and services. Now I will still go through all of them. So we get back to this market watch. The bid and the ask price. The ask price is the lowest price that the seller is willing to sell an asset. I have a GSM phone. You want to buy it, and I told you 23,000. You said no. That's the ask price. 23,000. The ask price. That's the price I'm willing to sell it. Then you said no, that you have only 20,000. That is the bid price. The bid price is the highest price that a buyer wants to buy an asset. That's the price you want to buy it. Now, the ask price minus the bid price will give you the spread. The difference between the two prices will give you the spread. However, the spread of some assets are not constant. As you can see, they fluctuate. They go up, they come down, they go up, they come down. Some of them are stable. They are fixed. They don't change. Now, the wider the spread, the harder it becomes for you to make money from your trading. And actually depends on your strategy and the volatility of a currency. Does it move or does it not move? How far does it move, if it moves at all? Because some movements are not movement. If you look at it moves, like this one you're seeing here, when it moves like this, we say it's a very nice market. It's a trending market. It moves one way. When it moves the other way too, when it comes down like this one you're seeing here, we say good. This is also a very nice market. But when it goes up, comes down, shortly it goes up, shortly it comes down, shortly it goes up, shortly it comes down. That is a ranging market, like what you're seeing behind here. All right. I have there are some other terms you need to know. This one, apart from this one going up and coming down, there are some other things you need to know. I will explain more on this trending and ranging market. Like this one is a pure trend, a beautiful trend. You know, we make more money on trending markets than ranging markets, and maybe I will explain that more on advanced class. So let's get to the details. Here we have only 3 assets. We cannot just trade only 3. You may trade only one and make all the money you want, but I want to introduce you to some other features. We have only 2 assets here. We have step index and Euro USD, and then I could also open this one by right clicking on this. You click on chart window. Once you click on that, it will open another one here. And you see that GBP USD. This is the typical look of the chart when you open it newly. So you would have to come up here to the toolbar and change it from bar to candle so that it looks like the previous ones. You can click on this adjustment to shift it forward so you can see the price properly. The price bars, this is a 1 hour price bar. Let's change it to 1 minute. I will explain better on that. This is now on 1 minute price bars. When the bar is green, it shows that the price closed while going up. When the price is white, it means the price closed on coming down. It could open anywhere. The price might open at the top, but if it comes down, that means like this current one now. You see where it opened. If it comes down and stops below it, stops somewhere below it, that is the price coming down. If it comes down from there, if it comes down and down and down, we know that the price came down at that particular moment. The price reversed. Look at this one. From here, it went up. From here, it came down. So it comes down and goes up, comes down and goes up. Not always. Look at this one. It's a pure trending market from here. Pure trending market from here. And it will just continue going down. Just continue going down. Now, not for sure anyway, but I'll tell you why I'm saying what I'm saying later on. You can't just look at it like this and assume that it will continue going down. No. There are reasons for things I say. And that's why I said you need advanced class. So this is a pure trend. You can see they are mostly white up until this level. You see green, white, green, white, and all that start mixing up. The price comes down. When it is white, we know that the price came down. When it is green, we know that the price goes up. So you sell when it starts on white. It starts showing white, you know that it's time to sell. When it starts showing green, you know that it's time to buy. However, don't try this on your real account yet. You have not learned anything useful. Okay, so what if you need more of assets? You only have to right click here. You can click on this plus symbol, click to add. Click here, type the name of the asset you know about but it's not here. You can just type it, USD. Look at, once you type USD, you have so many other assets related to United States dollar. You have Bitcoin, United States dollar here, so many other ones that you can trade. Bitcoin Cash here. So, however, you can simply right click. You can simply right click on this market watch. You can simply right click here. You click on show all. Show all. That's what you need to do. So that you can then scroll from here, go down. All these volatilities, that's the binary we've been talking about. Look at the spread, 400, 600, 1,000, I mean 15,000. Look at this one, 15,000. Sometimes you see 18,000 and all that. So that's the slippage, the change in spread. That is the slippage. The spread changes. Sometimes it gets wider. The wider the spread, the more you are exposed to risk of losing your money. Never forget. So it's better to have a very smaller spread from 1, 2, 3, 0. 0, 1, 2, 3. 0, 1, 2, 3. So it's enough. 0, 1, 2, 3. It's enough. It's enough for a spread. 7, even 11 is okay to trade. 10 is okay to trade. But I'm only giving you recommendations for the best. Higher spread does not actually mean you will lose. Why? If the volatility is high, the spread does not matter. If it moves so well, the spread does not matter. But if it doesn't move so nicely, you might get stuck to the extent that the trade you bought might stay for 2-3 days before giving you profit. And that's why some people goes for volatile pairs. That's where you can make money faster. If it doesn't move, you won't make money. Binary, you can trade binary all day, all hour, Monday through Sunday. But Forex is from Monday to Friday. Monday to Friday only. But on binary, you trade all day, all night. There's no break. Okay. Another thing I would like you to understand here, we call these also quotes. Quotes, the prices you see here. They give you quote. This person has an ask price, the other one has a bid price. We also call it the quote. Then I would like to explain to you that a digit difference from the current price of an asset is known as the PIP. P-I-P. PIP. 1 digit difference. This one is 17 or 160, whatever the price is at that moment, but you added 1 to it, that is a PIP. Or it's added 1 by itself, that is a PIP. If it adds 2, that is 2 pips. If it adds 10, that is 10 pips. If it reduces, whether it adds or reduces, it is called pips. 1 pip up, 1 pip down, 10 pips up, 10 pips down. It happens that way. Okay, that's pips, and I'll still, practicalize how to use some of those here. Okay, right now, let me show you how to buy. Also, how to buy in the first place, because there are some things there, how to buy and how to sell. We'll be using GBP, this currency, we'll use this one, GBP USD. You go to new order here. You can see new order. That's where you decide to buy and sell. You can also right click on it here, GBP USD, you right click on it, you will see new order. So these are the shortcuts. So let's just go straight from here. New order. The symbol is where you can select an asset. In case you arrived here, you change your mind, you are no longer buying GBP USD, you can click on this drop down menu here. Look at them, there are many of them here. You just choose, all of them should be there. You choose the one you want to trade on. The execution, you want it to start immediately, not pending. Pending orders will be covered in an advanced class. How to set up pending orders will be covered in that. This one is just the basic. It's for advanced class. Pending orders is for advanced people. You must have learned the basic ones before you get there. The volume is also known as the lot size. This is where you decide whether you make profit or you crash your money. 0.01 is the micro lot. You call it 1 micro lot. The value of this in pips is that if you buy and the market goes 1 pip up in your favor, you have made 1 cent. If it goes 10 pips up in your favor, you have made 10 cents. If you set it to 0.1 directly, like this, it means that 1 pip, the value of that 1 pip will now become 10 cents per pip. 1 pip, 10 cents. 10 pips, $1. If you now decide to make it 1 lot size, 1 volume, you are now saying that you need 1 pip, $1. 1 pip, $1. You understand the range, you understand the scaling. 1 pip, $1. 1 pip, $1. Good. However, you don't just do whatever you like. It depends on the balance you have. You may not be allowed by some brokers to use 1 lot size. If you have $100, you cannot make $1 if you have only $100. You will not be allowed. You need sufficient balance so that you can trade sufficient volume or lot size. That's how it works. You don't just put $5 and decide to be making $1 for every trade you place. No. You'll learn more about that in advanced class. So that's the only thing you need to do for now. You set up the volume. For now, I just need 1 cent. Now you decide whether are you selling. Looking at this chart, do you want to sell now, or do you want to buy? Now it's going up. Looking at this green bars, it's going up. So I may just decide to buy. Click buy, and that's all. You can see the green line here. It shows that you have opened a buy position here, and it says you bought it with a lot size of 0.01. You can see it here. This is the ticket number, and below here it shows the trade that you just opened, and you are already making profit of 12 cents. It's in your favor currently. It's in your favor. The aim of this is not to make profit. This lesson, this tutorial video, is just to show you how to buy and sell. Don't assume that you can do what I did here immediately and start making money. It's bad to assume with your money. Learn. I advise. Now, this is just the basic. You have bought, you have made some profit. If you want to close it, you click on this X button here, and whatever profit you have here will be added to your balance. If you have a loss there and you click on this X, whatever you have there as the profit will be deducted from your balance. Equity shows the exact amount you have according to the current market situation. You have 4 cents here. It is already added to your equity, but not to your balance. Your balance is untouched. That's why I call this one, I keep telling you that this is just a floating profit. It is not yet your money until you close it. You can close it by clicking that X button there, or you right click here. You click on close position. That's it. Look at this. We have a balance of 40 cents. You have 46.40. And if I close this position, if I close it now, it will no longer be that. It's now 54 cents. You have made some money. From 40 to 54. That's 14-cent profit. If you go to history, here, look at the history tab below the toolbox here. If you go to history, you will see that that trade that you just closed. Go to history. Look at this. You have 14. Look at it. You made 14 cents. You just made 14 cents. All right. Let's go back. What we just did was buy, right? So you can also do. You can also sell using the same approach. Well, let's the same way you bought is just reverse this way to sell. So you go back and then you click sell. It doesn't matter the trend. I told you this is not about making profit. You click sell. Remember your volume, and there you go. You have opened it. You can see the broken line. It has shown up, showing that you just opened a position for a sell at 0.01, which is 1 cent per pip. You sold, hoping that it will come down. Now GBP USD, you can see you have negative floating profit. It's already deficit anyway. It is because of the spread. It's currently floating between 8 and 10. That's why you start with a loss. It's a wager. It's a wager. So, and here you go. Now you are making profit. Just
turned into your favor. So that's the market. You don't just get in and start cutting liver. You have started losing. Oh, no, I'm not supposed to. No, it's normal. That's why I said confidence is necessary for this trading. You need to understand how it works before you get into it properly. It's normal to see those negative balance, even negative $1,000. It happens. In the end, you still win the trade. It requires confidence and patience. So that's how you sell and that's how you buy. The stop loss and the take profit is next. Let's say you want to stop this trade at, let's go modify. You go to modify or delete. Modify or delete. It will bring you back to the other box, dialog box. You will now have to decide. Since you know that 1 pip is 1 cent, this is already 50 pips. So how many do you want? Maybe you say you need 80. You want to stop, to take the profit at 80, sorry. Stop loss may be double. You may double it to 1 or just make it more than the take profit. So you may double it, or let's say 80, right? Oh no, it has crossed 80. 100, that's why it's no longer active. So let's make it 100 or 90. I just want it to close quickly. Oh my god, it's moving so fast. It's moving so fast. Oh my god, it has passed 120. You can see 100 and something pips within few minutes. I just want you to see how it works. That's all I needed. I don't need all this. Okay, here it is. So if it comes down and touches this red line below here, this trade will close automatically. You are just simply saying that since you sold at that high price when it was there at the top, you want it that whenever it comes down here, that you want to buy, that's when the trade will close automatically. This is a pending close order. You want it to stop automatically and give you any profit it has made. You see, it has closed and it has given you profit. This was 46, and this, now okay, let's see the profit actually from the trade history. Look at that. It took profit here. You have made 140. Oh, sorry, $1.40. That's 140 pips. It was so fast. Don't be offended, but I hope you understood what just happened. During your practice, anyway, you place your own trade and you see how it works. I want to try. What I want to do now is I want you to see how stop loss works. If you open a trade, I want to show you how stop loss works. You open a trade, for instance, it's going up, right? You just assume, hey, this thing will go up. Then you buy, right? You place you open the buy position. You set your stop loss. You open the buy position. Stop loss is a pending order showing that you don't want to lose more than a certain amount of money. Let's say 50 cents. You don't want to lose more than 50 cents. Then you say stop loss 50 pips, because your volume is 1 cent, so 50. Then take profit. You want to take profit at maybe 20. You want it to go up and give you just 20 pips. That's 20 cents. Look at that. So if it comes down and touches this one below, you have lost, because you bought and then it came down, came against you. You have lost that money. That is stop. That's it. That's stop loss. Look at it. It didn't take profit in this case. It went to stop loss here. And because of the speed, you lost more than just 50 cents. It moved with speed and then you lost 52 instead of 50. The same thing happens to it is applicable to profit. It could give you more than the profit, depending on the speed of the movement, the price movement at the moment. And that's what we call spike. In this case, it didn't spike per se, but it does sometimes. It moves with a certain speed sometimes that it ignores what the exact order you want it to do. So it will either give you extra profit or extra loss. Most traders, is a secret, don't use stop loss. I don't use stop loss. I'm going to tell you, and I keep saying, the system is designed for you to fail. Most traders don't use stop losses because after going down, look at it, it has come back up again. It closed this trade down here. Now it is going back again. After coming down, but the problem most people have is their volume. If your volume is so high, without a stop loss, you're a dead meat. Your money is gone. So if you need that kind of trade without stop, look at that. By now, had it been the trade is still open, how many minutes? 1, 2 minutes. The second minute, you're already in profit. But because you set a stop loss, it came down and cleared the money. Took that one away. I'm not saying it's bad, but you need to understand the differences and how to use it. If you open an excess volume, if you use an excess volume and you are afraid of losing so much money or whatever, you don't want it to take longer or float, and set your stop loss. Then sometimes you lose, sometimes you gain, sometimes you lose, sometimes you gain. You can keep it that way. You can keep trading that way. So that's about take profit, and that's about stop loss. It has short form SL as for stop loss, TP for take profit. TP for take profit. So let me introduce you to indicators, and that's how they help you with trading. How they help you with trading. Can you see that now? That's crazy. You opened a position here, it came down here and gave you a loss. Short seconds later, you're already here. And it's looking like it wants to pipe up a little further. So using stop loss, I'm not saying it's wrong, but it could give you more loss than without it. All right, one secret you have received. Okay, free. The indicators, I want to go for a trend. We have trend, we have oscillators. For those who know a little about physics, you know about oscillating. This is an oscillatory movement. It goes up, it comes down, it goes up, it goes like what? Let's go trend. I want to use moving average. We have Ichimoku Kinkoya. It's another good indicator, but for now I want to use moving average. Moving average is popularly used everywhere. I want to set it to 20. Period of 20 means that you want to use the average price of 20 candles, 20 past candles, past ones. You want to use the average of those candles to decide whether you want to buy or sell. There are different types of methods of this moving average. We have exponential moving average, we have smoothed moving average, we have linear weighted moving averages. The shift, you leave it at 0, whether it's to shift it forward or shift it backwards. You can practice that actually on your own and find out how it works. I did it; it was useless. I don't use it for my trading. So the color of the moving average is currently set to be yellow. You can set yours to be blue, green, any color. This the type of line you want it to have. You can set it to. So then you click OK. That's all. When you come here, you don't have any much settings to set to put up here. For now, at this level, Just click OK. Maybe use 20, 30, 50, 100, 200. Depends on your type of trading, the size of the account, and what you want to achieve. That is where traders really messes this thing up. Okay, here we are. It has opened, right? It is clear looking at this point where it crossed the price. If it crosses the price from below, that's the price has been above it, but now the price came below it and opened a new candle below it, you can sell. If you sell, it means all this money from here down would be yours. Up to this very moment, it's still your money. You'll be making money. If it has been below and the price crosses upward and open a new one, you buy. However, sometimes it will mislead you, like what just happened here. It crossed from below here. It moved up and opened a new one above it. If you had bought here, it reverses against you immediately and you start losing, and up to this moment, you are still losing. That's the trick. So you don't apply everything you see on this video. Never you try it on your real account, or never you assume that you have known it all by watching this video. You still need that formal education. You need it. Don't argue. Don't make it cheap. Your friend taught you, that's not all. All right. Let me show you something else here. Let me bring this forward. What this thing is doing currently is what we call support movement. It has been trending for a while, so sweet. Now it decides to play a trick on you. It goes up, claiming that it wants to go up. If you are foolish enough, you just agree, you just accept it, that it's going up. Then it realizes that you have accepted the movement. It continued this movement, started coming back down again. You get confused. It decided to pack again for some minutes. It packed for some minutes. Now it decided to come down again. You are getting more confused, right? All right. So that's what we call support movement. At this point, is on a support level. Can you see that it has crossed this moving average? At this point, as a learner, you may just buy. However, you may still fail. It may not be successful. Look at this. This is the lowest price, right? This white one, okay, the green one here. This is the lowest price it has reached at this moment, right? Now you will have to wait. If it goes up and continues going up, fine, you may buy. But wait for it. If it comes down from there, from this current place, this current price, if it ever comes down, and cross this line, if it ever comes down and crosses this line, you know what? That's what we say. That's when we say that it has broken the support level. Sorry, I had to cut the video for some reasons, but then I still came back on time. So I was saying that if it crosses this line, you see, it didn't allow me to finish. Anyway, that's how it works. If it ever crosses this line, as it moves, look at it here. Look at this one. When it came up, it went up there, then it came down. Once it crosses the line, that's all. Once it crosses the line, that's all. It will go down. That's what is happening now. It just broke support. It just broke the support level by crossing this line that I drew here. It broke the support level and then it's going down. So had it been you bought immediately you saw it cross this line, you would be misled. That's because you had no idea about price action, how it moves. Before you trade, these are few technicalities you need to understand. This happens also if you are buying. Let's use a kind of opposite reverse pair, currency pair. Let's show on, look for USD CHF. USD CHF chart is probably going up right now instead of coming down. USD CHF or USD JPY. Let's open the chart here. We set it up like the other one. Just click on this candle, click on shift, this button here, shift end, so that it will come closer to you. Add the moving average 20. Look at that. So it's kind of ranging. It's ranging. Look at the distance from the top, from here to here. It has just been going up and down within this range. So it's not moving up so well, it's not coming down so well. So but currently it is going up. I wanted to show you something. Okay, this is a 1 hour chart. Let's move it back to 1 minute chart. Let's see. Good. It looks beautiful now. I forgot we were working on 1 minute chart on GBP USD. So look at it. When it crosses from the top, like the price has been at the bottom of it, it crosses so nicely, and it opens another one at the top nicely and start going up. You can buy. That's an uptrend. This one is usually the opposite of GBP USD or Euro USD. That's why I opened it up. GBP USD is coming down, and now it is going up. So look at this. If it, like this one, what it's doing now is what has happened here, and it has crossed it already. Here we have what we call, instead of support level, as we call it support, here we say, look at this. This is the highest price it has reached recently, right? The second one came. It came down, it reversed, came down to this level, then went back up, but it couldn't move, it couldn't go beyond that line. Just the same price, it turned back. Start coming back down. Now, if it opens a new one here, like that, it just opened a new one and start coming down, that means the trend has changed. It has reversed. It's now coming down. It's now coming down. It's no longer going up. But if it goes back up, and crosses this line, then it's about to fly, to go up very well. And once it crosses this line, you're free to buy. That means it will go up. That's how it works. That's price action. So it works so well. It's a method that works so well if you implement it. Because the problem we face most time is implementation. We might know what to do, but we can't do it. Maybe due to our emotions and all that. Look at it. It happens once in a while. It doesn't just fly to your direction. Look at it. It came down, went back up a little. Upon return, it broke the line, broke the other one, and then it's flying down. It happens once in a while. You know, it doesn't just go one way. It is hard to find it go one way like that. And when it goes down one way like that as well, we say that it's, of course, as it's moving, currently it's trending. It's a very nice market. It's a very nice market to make money. It's trending. So when you get confused on your analysis, kindly get out of the market. Don't joke with your money. Don't joke with your money. If you joke with it, they will collect it and keep for you. Okay. Now, I think for now you have known the basics. You've learned how to buy, you've learned how to sell, you've known few things about pips, you've known about stop loss, you've known about take profit. I think these are the basic things you needed to know in order to implement the strategy that would help you make a lot of money from trading. You have learned a lot already, and you don't have all you need to do is practice a little and watch the video. If you have not created an account, you need to create an account. Watch the video on how to create an account. This create an account, come to this download Metatrader, this platform, download this platform, install it either on your phone or on your system. Then come here. Firstly, you can start with your system, anywhere. But then if you're following one, you follow it. I'll be making videos for phone and system, desktop, both ways, so that you can follow anyone you want, anyone at all you want. So that's it for now. If you have questions, you can leave it in the comment below. If you have suggestions, any of our social media channels, they are always open, never closed. You can send in your comments, your observations, whatever you want to say that is in your mind, provided it's positively addressed, then you will get a reply. So that's just the few things I wanted to teach you before we get into the advanced level. So you've known about the supports and the resistance. When it's going up, we call it resistance. When it's coming down, we call it support. Look at this, it's now at the same level. If it ever comes down here and goes beyond this line, this one, if it comes down here and goes beyond this line, that means you would have to sell. You can say you're free to sell. That's price action. When it's moving within the range and all that, you don't mess your trade up unless you are already in the market when it started. Then you keep quiet and watch. Don't panic. You keep quiet and watch. Alright, so that's it. I've been using all this the same way you trade these ones. You can use the same way to trade your binary. This is step index from binary. We have volatilities. However, the pips, the volumes, you cannot trade every currency with $100 or every asset with $100. Some assets requires that you have up to even $1,000 before you can trade them. Some assets requires just like $50 to trade them, even $5 to trade them. So these are the things you need to understand in the advanced class before you venture into trading, to avoid that disaster that happened to me in 2008. You need to be wise this time, because you have someone who have experience. Experience really counts, my dear.